what does this mean for stock prices? Well, oddly enough, here's where things get really interesting. Even though the Federal Reserve has been cutting interest rates and the stock market is constantly approaching all-time highs, historically, the Federal Reserve does not cut interest rates unless they absolutely need to. Like, it's not as though they say, hey guys, so we need to get the S&P 500 to 7,000 this year, and here's a rate cut to speed things up. Instead, they drop interest rates in anticipation of events that could be disastrous for the economy, almost as a way to help soften the blow. And this has been the case for the last 3 recessions. In 2001, they cut interest rates at the start of the dot-com bubble. In 2009, they dropped interest rates during the financial crisis. And in 2020, they dropped interest rates before everything shut down. In these situations, the market drop was not due to the rate cuts themselves, but rather the events that led to the rate cuts in the first place. So with more rate cuts planned throughout 2026, does this mean we're doomed? Well, not quite. As you could see, after enough time, there have been plenty of occurrences where the market eventually begins to recover, some of which produce rather substantial returns. But you just have to be patient. As of now, our markets have been fairly resilient, mainly boosted up by AI and a lot of consumer spending. Plus, drops like we've seen are actually pretty normal. Like, on average, a 10% correction happens every 16 months, and throughout the last 20 years, a 10% drop has happened more than 11 times. Then if you're like me and you like the averages, the average drop has so far been about 15.6% and lasts for 71.6 days. So even though every situation is unique, price drops are not. But what about Bitcoin?